GM. Welcome back to Get Real with Mu Digital. We have made it to episode 7. My name is Patrick. I'm here with my co-founder and co-host for tonight, Cholo. Today, we have a very special guest. We've brought in one of our mentors, a dear friend to the project. He is the head of program at Cointelegraph Accelerator, Anthony, also known as Mr. Dip. In full disclosure, we are supported by Cointelegraph Accelerator, so all takes on this pod may have slight bias. We'll do our best to keep it real. Anthony, welcome. We call this pod Get Real because we want the unfiltered takes on Web3, on what needs to change, and how all of us are helping to build the future together on chain. Let's start from the beginning. Can you please tell us about your background and how you found your way into Web3?
Yeah, G-Moo. I've been in sales and marketing all my life since I was a young teen. Ultimately, found my way into Web3, I'd say 2020. Really dove in full-time 2021. Just came in as a day trader, had some success. 2021 was a hot year for everybody, myself included. So, I found that success, quit my job, went full-time, participated in trading groups and things like that, and was pretty open about my professional background. And in doing so, there were a number of different founders that were looking for assistance with bringing their product to market or bringing the project to a state of scaling, essentially. Hopped on board kind of in a freelance or fractionalized manner, found meteoric success, and then from there decided it's time to get into advisory. Opened up a consultation firm, operated for about 5 years. And then, of course, recently found my way to Cointelegraph and very much enjoying my time here.
Got to ask a question. Like I asked you before the pod started. Like, what's the origin story of Mr. Dip? Like, did you buy the dip, or you like dips, or how does that work?
Yeah, so those trading groups I alluded to, one is referred to as the sewers. We did a lot of degenerate stuff. We traded a lot of meme coins and shit coins, if you will. Excuse my language. But at that point, I hadn't fully understood the industry. Obviously, I was relatively new to it. I thought I knew everything because I was hitting play after play after play. But my trading strategy was pretty novice, if you will. So ultimately, what I was doing was when I saw a dip on something that had a little bit of a narrative or traction, I bought big bags. I go in on meme coins, 50, 80, $100,000 bags, and then I'd flip it quickly for 1.5, 2x. And throughout the group, I haphazardly came into this space as Anthony V. Francis 1989 was my username. I didn't understand anonymity apparently. But one of the community members recommended I change my name to Mr. Dip, and since then I've been the Mr. Dip.
I love that, and I hope this cycle we're at the dip, and it's only up and to the right from here. But interesting background because you've been through the space in multiple cycles. You've caught some of the interesting waves. So I'm curious from your perspective how, I guess, your perspective on building in the space has changed over multiple cycles.
There's quite a bit to identify, but I think the most important points would be one, the maturation of the space. And I think that the shift that we're seeing right now where traditional finance and DeFi are really connecting is as a result of that maturation, right? There are many people who came in, myself included, that didn't really know what we were doing. We're high stakes, high risk gamblers, essentially, ended up, acquiring capital. And there are many people, you see billionaires all over the place, just early Bitcoin buyers that now are not those high risk investors. They're individuals who come in and started focusing on how can they preserve their wealth? How can they be mature about it? How can they look into stable and secure financial instruments? So I think that is a big component, just the psychology behind most of their participating within the space and how that is enabling traditional investors to come into the space. And conversely, on the building side, there was a lot of degeneracy, and there still is a lot of it, but that I think runs very parallel with the fact that even the mature builders in the space, they were just trying new things and seeing what sticks, right? It was really just ship fast, see what happens, run with a narrative, construct a narrative, run with it, and see how things evolve and establish themselves. And as a result of that, we've seen products that have stuck. We've seen things that have actually worked and proved a viable solution to a real problem people are encountering. And as a result of that, now we're seeing real development, I would say, and real business structure, as opposed to just a couple of anonymous people hiding behind PFPs and throwing out a product. Now we're seeing real tangible business, the fundamentals and foundations of business structure coming into place. So I think it's really the maturation, both on the investor side as well as the builder side.
And this probably leans into my next question in terms of, even your own personal journey through crypto. You started as an advisor. I assume it's just because you found projects or founders that you liked that were interesting, kind of narratives, and you sort of started on that on a one-on-one or bespoke basis. But of course, now with the platform that you have at Cointelegraph, you must see the whole gamut of types of projects that are under the sun. So I'm just curious, especially now in your role, how fast are things moving? Like, what are you seeing? Just, like, how different is it now in the space versus as you came along?
That there's some caveats to that. So one, I do think that the industry is moving rather rapidly in terms of, again, exploration, research and development ultimately. Now with this platform, I do have a wider exposure, right? Prior to both my investment practices as well as my advisory services were predicated on the things that I had a knowledge base around already. I was very selective. I worked within niche markets and I invested within those niche markets because, again, I had the knowledge and expertise. Now, obviously, working with Cointelegraph, I'm exposed to much more, which is a double-edged sword. It's a fantastic opportunity to learn more, and I'm learning every single day, which in this industry, I think everybody has to, especially with the emergence of AI. Like, this place is moving quickly. Now, conversely, I become exposed to things that I don't necessarily have an expertise on. So if I'm not active in that learning, you can fall behind and you can make mistakes. So it's something to be cognizant about. And it's something that I've truly enjoyed now that I'm breaching outside of those echo chambers that I was kind of trapped in before. But, looking at the industry, the evolution is quick. I think over the past few years, and even prior to me coming into the space, when I look at the ICO era, looking back and looking to the ages prior to that as well, there was a lot of, again, exploration, like what's going to work and what does really solve a problem and what is going to capture attention and quote unquote mass adoption. We've heard that cliche a million times. But now I think we're at that pivotal point where we're seeing it happen. We're understanding that it's not TradFi versus DeFi. Ultimately, it's going to become finance. It's no different than when traditional finance moved into the internet, right? We introduced new technology, new rails, and that, of course, provides a wealth of opportunity and benefit. But at the end of the day, it's just the underlying technology. So we're at that point of, well, how do we actually capture the large liquidity around the world? And how do we do so in a way that is actually different than what's being done elsewhere? Because otherwise, what's the point?
No, absolutely. And I love that because I wanted to segue into, we like talking about particularly the DeFi space. We often get labeled as, real world assets builders as, just that space, the tokenization space, just RWA. The way that we always looked at this is the reason we're in crypto is to further the DeFi narrative. RWA is just one component, and we consider it the base layer of DeFi. But from your perspective, what do you think is the current state of DeFi?
That's a great question. RWA, I agree, is the foundational layer. I would rather call it, the converging point for finance, realistically. Ultimately, when RWA is achieved in the vision that many people have within that segment, that's when TradFi and DeFi become one. I see the state of DeFi as quite positive. The sentiment for me is fantastic, right? We're seeing true interest from traditional investments, whether that's at the institutional level or whether that's just those that are looking to preserve capital. They're now looking at this technology as a way to improve the practices and processes they've been going through in the past. That to me is a bullish indicator. And then we start looking at not just how does it improve performance, how does it improve accessibility, but what additional features can be added to that product. If we look at finance as an overarching product itself, and the evolution is fantastic, right? That there's just something new every day, it appears. Now, what is going to garner the traction and sustain the long term? Difficult to say. I think we're still through those trials and tribulations, but the way things are opening up is absolutely majestic, in my opinion.
Yeah, and maybe just to probe a little bit further than that, there's been a lot of innovation in the space. It's kind of like, every cycle, there's always like 2 or 3 narratives like that the space looks at. From a DeFi perspective, we're seeing innovation in the space, but what do you think is the biggest gap? What's still missing in DeFi today?
Well, I think that there's a number, but ultimately, when we really want all finance on chain, liquidity is a big problem right now still. And I know that sounds peculiar because we're at all-time highs, but ultimately when you're talking about trillion-dollar industries and you're talking about individuals with billions of dollars of wealth to preserve, it's very difficult for them to enter in all in, right? They have to test the waters. Again, the technology is rapidly moving. So for someone who is looking for something that's fluid and familiar, there's a risk that may not match their profile. So it's really solving the fragmentation of liquidity, which I think is happening. And then, of course, increasing the liquidity and making opportunities available to those that can actually flush the capital in. Like ultimately, there's a lot of money that's still not on chain, and we need to bring that in. But again, I think there are some really powerful entities that are working in our favor in that capacity. Coinbase is doing amazing things, the way they're campaigning with governments, garnering government traction. And they're not the only ones, of course. Circle's doing some fantastic things, and many others. So I think that's really the biggest problem to solve. And I'm happy to see that I think we're solving that right now.
I mean, like we talked about this on this pod before. Sorry about yeah, when we talk about like DeFi, like I mean, admittedly, for people that came from TradFi, DeFi size is not size. Like you talk about like tokens that are like top 100, or FDV is like 4 billion. That's like one bond deal in traditional markets, right? So it's that kind of like that gap that people think like, oh, the institutions are coming. The institution are already here. The reason they haven't come in size is because there's no confidence that DeFi can actually handle the kind of size that they're used to, right? These are institutions or corporates. These are borrowers that are used to like billions of scale, and we're like talking about millions or hundreds of millions. And I think there's that gap. And I think rightly or wrongly, we've kind of been labeled as like the crypto, the casino of finance, right? It's all meme coins, it's all kind of like speculative behavior. What do you think needs to happen for that to change? I know it's going to be like, it's a hard question to answer because it's multiple things. It's like presentation, it's like profiling, the branding to the market. It's also infrastructure. But where do you think the biggest gap is from where you sit around bringing that kind of like institutional money, or that kind of like grown up behavior on chain? Because it's been a holy grail for like the last 7 years, I would say, like since the ICO boom.
Yeah, I don't have a tremendous amount of experience in traditional finance, but from the outside looking in, and in my experience, I think again it really comes down to the pendulum swinging between centralization and decentralization. When I came into the space, I was a huge advocate for decentralization. I think it provides a whole new world, really. Having control over your own finances is extraordinarily important. But at the same time, pure decentralization is also pure chaos. There's a reason why 10,000 years ago we started coming together from tribal communities and actually building civilization, is because chaos doesn't work. It's not scalable. On the other end of the spectrum, centralization provides that scalability, but with centralization comes corruption and control, right? So as the pendulum swings, I think the crypto community is going to make its way back into a kind of a centrist point where we enable centralization, we allow it, we facilitate it as a culture. Because at the end of the day, Goldman Sachs, JP Morgan, Chase, these institutions, they're not coming on chain and deploying all of their capital into Ethereum or Bitcoin. It's just not going to happen. It's too much of a risk, right? They need their own internal infrastructure. They need to migrate from the legacy systems that they have. And we need to see that within Fortune 500 companies as well. So we have this collaboration between corporate and financial. So I think it really becomes an infrastructure situation where we enable the opportunity for these institutions to maintain a semblance of control, right? Like transparency, having immutable transactions, everything on chain. I think that's fantastic. But to a certain extent, that's not a viable component of these business models, right? So it really becomes them building out their own infrastructure and capturing their own control over the liquidity. And I think stablecoins is an opportunity for that. And obviously, whether it be private and public blockchains, but enabling their own blockchains as well. That's really important to me, I think.
Yeah, you raise actually a super interesting point, because I feel like this is a conversation I end up having a lot with builders that have been through multiple cycles, and it's always been since the white paper and original white paper in 2009. Decentralization was a fundamental tenet of the entire crypto movement, right? But then, as you've seen things evolve over time, the question becomes, which points does everything need to be decentralized? I think, and really where that's leaning now is not everything needs to be decentralized, but what points are you okay with there being some centralization? We get this question a lot as a real world asset project, which, of course, everyone wants to replace the banks. And, like we kind of build for DeFi, and we want the distribution to be open and access and composable and all that stuff. Like that's a superpower of blockchain. But there are just some parts that cannot be decentralized. How can you decentralize? If you look at what we do, like we go to corporations and governments that want to issue bonds. They're not just going to go to the ether, like into like what they consider like a black room, IRC channel, crowdsourcing for like $5 billion in financing, which is what they do, right? So there has to be some trust anchor along the way. And I think that's where the nuance in the discussion is moving today, particularly where we play in DeFi. It's where should that trust anchor sit? Because there's still philosophically, there's still a whole range of, where that trust anchor sits. And we also think that the way that the banks are doing it is they're not actually furthering the space at all. They're just pasting their products and distributing it through the walled gardens, which we don't think is the answer, but you're seeing people try to build in all sorts of ways now today. I guess
I was going to say, it really comes down to a compromise, right? And it's not just the retail user, the institution, and the corporations and their collaboration. Government plays a significant role as well. And aligning all of these forces is really what's going to be important, right? We have to protect consumers. We have to preserve some level of control for institutions. Government has to have their hand in the pot, both for the protection of consumers, but also, for their own power trips. Let's be honest. And corporate needs to be able to play in the game. Otherwise, if they can't assure profitability to their stakeholders, what's the point in them operating within any confine?
So I guess I'll ask a little bit of a loaded question, but where do you see particularly real world assets and the trend towards tokenization and bringing different types of assets on chain? Where do you see that fitting in the whole pie of DeFi?
Well, again, to me, RWA is the convergence point for finance, right? It is the carrot on the stick, for the institutions to be able to come in and say, hey, we recognize what this is. This is familiar to us. This is practical and safe. Liquidity can be provided here and not be a casino, if you will. And additionally, this matches the product offerings that we have already. So this is just utilizing new technology and Rails to advance the product offerings we have. To me, that's a logical progressive step, right? And that's what it needs to be. Institutions, while they may run research and development components and they may be willing to invest some capital, they're not putting their business on the line. They're not putting their reputations on the line throughout the C-suite and the executive teams. There's just too much risk for everyone involved. So we need these small bite-sized progressive steps. And that's what I think RWA is. Bringing bonds on chain, I think that's going to be a pivotal moment when we see that in mass. It's not quite there yet. Obviously, stocks are more of a predecessor to that. And I think stocks are a great introduction. And then everything else along the line, different financial products, real estate, some of the other things we've heard in the past with RWA narratives. But ultimately, RWA is that appeal point that is going to be the conversion. It's working, and it's going to continue to work, in my opinion.
I have this I have this joke all the time. I was like, I hate this word real RWA. I hate the whole phrase because what does that mean? RWA means what? Everything we do in crypto is fake world assets. What is that? Virtual world assets. The world is barreling towards a future where everything is just assets, and it's the difference is going to be on-chain versus off-chain. And I think the off-chain piece, because it's less efficient, it's slower, less liquidity, less velocity, it just gets left behind in the dust. It's kind of like what happened when the automobile was first introduced. People just overnight realize, oh, where did all the horses go? That's what's going to happen with finance over time. It's just going to be this whole phase shift around. There's going to be no distinction between real world assets, which is I think is a misnomer. Off-chain assets is the right word to call it, and on-chain assets. Everything is just going to live on chain, and because it's just a more efficient ways to interact and transact in value assets, in things that have value. The internet itself is already very decentralized today. The difference between blockchain and internet is that the internet doesn't doesn't facilitate the transfer of value in the same packet as the transfer of data. That's what blockchain changes. And I think that to me is just a big convergence. It's not going to be DeFi versus TradFi. It's just going to be on-chain finance. It's not going to be real world versus TradFi assets. It's just going to be assets on chain. And we're going through that kind of I guess, birthing pains of the new version of finance. But to Anthony's point, there's going to be a lot of intermediate steps where you kind of have to work with these kind of very clunky structures where it's wrapped assets or it's tokenized equities. But the future is pretty clear. It's just the path there is not going to be linear. I guess that's where a lot of people overestimate how quickly we'll get there, and also underestimate the amount of work that actually has to go in to actually get to that endpoint.
Yeah, it's just proof of concept, right? Come up with an idea, build out the plan, build out the infrastructure, take a progressive step forward, prove it works, and then you have a little bit of credibility and traction to move into the next one, and into the next one, into the next one. Because at the end of the day, an overnight move for institutions is, again, it's just too much risk, right? It's a lot of capital. We already know these systems that they're operating with in the finance sector. It's much more progressive than, say, corporate. Start looking at what IBM's offering their corporations. These legacy systems, we're talking decades old, right? And there's a reason for that. There's a lot of initiative that's required for change. So just the gradient across, but seeing that we're not at that starting point, we're moving through it already. and garnering significant traction in terms of sentiment narrative and actual adoption. It's not just people talking about it, but people are participating in it. And when I say people, I mean institutions. That's a really positive sign in my books.
Yeah, and to your point, actually, so one of the things we like to do on this pod is talk about the different types of innovations or products that are coming out that are topical. And since we're talking about decentralization, one thing that's been interesting in the cycle is the battle between centralized exchanges and decentralized exchanges, and particularly the rise of hyperliquid in this cycle. Curious your takes on where you see this all going. Are DEXs really a viable competitor, to some of the larger players? Where do you see all this going?
Yeah, it's a tricky one. I, again, very much like TradFi versus DeFi, I see SEX versus DEX as converging ultimately. The centralized exchanges that are leading the industry right now were early movers with strong leaders and powerful business models, right? So they captured a large amount of market share. They generated a lot of revenue. And when you have a lot of mind share and you have a lot of money, you can do a lot of things. Now, emergence of DEXs like Hyperliquid, I think is a good example, as well as many others. Ultimately, the mantra of being decentralized is extraordinarily important, right? There are many problems that are solved on decentralized exchanges are going through. And I think that in this next iteration of centralized exchanges, we're going to drop that terminology. And ultimately, the majority of them are going to end up going on chain. And we're already seeing newer ones emerge, or some of the older ones move on chain. I think that's kind of a key component of that if they want to stay relevant. As well, they'll solve a lot of problems that they have internally with operations and optimize their actual flow and processes. So I don't necessarily see a battle between the two. I think that both have benefits. I think being decentralized to a certain extent is very important, but of course, maintaining a level of centralization is also critical. So I think that these two converge, and ultimately the centralized exchanges that will be successful tomorrow will be on chain.
You've kind of alluded to your bias on this a few times here with, just the convergence of, institutions coming on chain versus really like crypto native, degen behavior. And you yourself came from the trenches, right? As a trader. We hear a lot as we go through the conference circuit of, why are the suits here? There's so many suits here. This doesn't feel like a crypto conference. Like, this isn't what we built. Like, this is all changing, right? What would you say to those that hold that very, I would say, I don't even say outdated. It's just a perspective they had because it's the way this industry grew up. So what would you say to them today?
I think when I was attracted to crypto back in 2020, it was the ideological push associated with it, kind of the overarching mantra, if you will. And today, it's not the same. You're right, and it's not just today. I saw that narrative or that ideology start to decay probably like 4 years ago, to be perfectly honest. Even in the trenches, it's this cypherpunk mentality is very niche, I would say, and centralized around those that are ultimately building in cryptography. Even many product builders or just business leaders, that mantra doesn't mean as much to them today. I don't know if that's a good thing or a bad thing. I do believe that the pendulum swinging is very important. We need balance. We can't be extreme on either side of the spectrum. But at the same time, there are components of that, what we saw in the white paper back 2020 or 2009 that brought us all here and created this technology. We can't lose it completely, right? Like it has to be a component of the culture here, but we also have to be accepting of the liquidity providers if we want their liquidity. Again, compromise is critical. And I'm just a firm believer that being a centrist on just about everything is probably the best approach.
I want to ask the same question to Cholo. I mean, for those who don't know, Cholo and I have met, at a bank, and we're probably wearing suits and ties too. But so curious your take and how you see this convergence as well.
Yeah, I think like I came into crypto like as an investor. Like I thought that like Bitcoin and ETH were like doing numbers, and I thought like, oh, I can't miss out on that. That was like 2017, 2018. But I came for the price action. I stayed for the tech. Like I do believe that as Anthony mentioned, like I think there is a fundamental, I would say, I think whether you admit it on the face of it or not, whether you like willingly own up to it, like building in crypto means that you're in some way, shape, or form believing in the ethos of decentralized money and decentralized, where the old system has failed us, where it's not all kind of like trust the centralized institutions are going to take care of you. I think just like being a builder in crypto and just being a participant in crypto, you fundamentally kind of align with that mindset, which I think is important, because it's important to build that alignment, because like as long as we have builders and along we have participants that believe in directionally the same decentralized ethos, that money needs an upgrade, money needs to live on the rails that like live at the speed of information, the speed of like life in the 21st century, you're gonna come up with an industry that's directionally correct in terms of where humanity needs to go. And I think that I think fundamentally I still believe in that. Whether I fundamentally believe that every project needs to be decentralized, I think that's probably not what I'm thinking. Like in the same kind of like broad, kind of like principled way of saying like every company needs to be public. That's not right. Like there's many very successful companies that are private, probably held centralized in a very core of their operations. I mean, you went to Cargill, I guess, Patrick, one of the biggest private companies in the world. They still operate very efficiently, very well. So I think that there's no right or wrong answer, but I do think that I do think that like the whole nervousness of crypto around letting the suits in is I would say is warranted, but also misguided, because I don't think that the suits can take over this thing that crypto has built just because of the fact that they're being there. Like I think we still have very strong, I guess, leaders and leaders and kind of like promoters of crypto, like promoters of decentralization. That's not going to go away. Like just us being here and still talking about this means that we're not going to just like give it up to the barbarians at the gate, so to speak. And I still believe that's probably the way that crypto defends itself, because we're like the builders are here fundamentally in some way, shape, or form believe in decentralization as a advantage over the existing financial system, and that's not going to go away anytime soon.
Yeah, and that's an awesome segue, because Anthony, we like also talking about on this podcast just the founder journey. We're founders ourselves. We learn along the way, but you have a very unique perspective, and that's literally what you do in your day job now is identify high potential founders and then working with them to help them find PMF and help them take them to the next stage. So from your perspective, I mean, you've seen so many different types of founders and ideas. What do you think differentiates, founders that ultimately will make it?
It's a good question as well. There's a number of pathways, because I like to profile founders. So it's not like a one size fits all, but if we're looking for overlaps on the Venn diagrams, some of the things I like to look for initially are historical traction, obviously being able to ship, being able to actually come through on a vision. I mean, it's not hard to come up with an idea. Everybody has ideas every day, they're popping off all day, every day, but can you actually put it into action? So looking at a history of success is important. And I don't say success like, hey, they exited a $4 billion company. No, they actually followed through on what they said they would do and were capable of delivering. At the end of the day, sometimes you work on a product, you release it, and it's not solving a problem. It's not of interest to the audience. It's not matching a narrative at the time. There are definitely failure points along the way that are beyond the ability to deliver. So that's a starting point. That's a really big one, I would say. Also, the ability to adapt and overcome. Nothing in life is linear and clear. Life is very organic, and business is no exception. So while you may have a fantastic idea, if you're not finding market fit, maybe that product needs to evolve in a certain capacity. Maybe it needs to pivot in a different direction. And the ability to recognize that early and stay ahead of the curve and move in the direction you need to, I think is very important. And that's a very unique skill set that I think a lot of people struggle with. Those are two big ones, I would say. Additionally, give me a second. There's quite a few, but I want to make sure I emphasize the ones I think are most prevalent. Those two are very important. Something that's a little bit an aside that I think many fail to recognize is the ability to communicate as well. Communication is extremely important in all facets of life, but I see brilliant founders, outstanding engineers, developers, they have a beautiful concept for a product. They can move fast and ship it, but they don't know how to get out in front of people and talk about it. They don't know how to actually communicate what it is that they're building and why it's important. And in many cases, that's a skill that may be difficult to develop. So those founders maybe should be looking to hire the right people. But if you can work on developing that skill set, that's very important. You can't pitch to an investor. You can't hop on an X Space or a podcast. You can't get out at a convention and try and push your product if you can't communicate with people. So communication is very, very critical. Getting back to the product component as well, when talking about solving a problem, because that's the cliche in your deck. What problem do you have? What's the problem? How do you solve it? Ultimately, in this space, and this is not, I wouldn't say necessarily unique to Web3, but I see this actively across the crypto space, is trying to solve problems that aren't really problems. A lot of founders are creating their own problems. Maybe it's a problem they experience, or maybe it's just something that they've imagined, but they create the problem, they create the solution, and they think they have a product market fit, and nobody cares because it's not a real problem. You have to look at what's actually happening across the ecosystem. And then beyond that, as well as those that do recognize a problem, trying to solve too many at once or trying to solve the biggest problem. Find a niche, right? Get very, very focused, very precise, attack this niche, again, prove a concept, iterate, garner traction, and then you can start to expand it to maybe solve multiple problems or scale up the problem that you're solving. But trying to do too much at once or trying to focus on something that's very generalized is a very difficult task. One, because can you actually achieve that goal? And two, if you can, are you going to be able to compete with the folks that are looking at those types of problems? When you're talking about the big ecosystem problems, you're talking about organizations like Coinbase and Circle. You're talking about people with billions of dollars, government support, corporate connections, and they either A, will buy you out, which would be a positive opportunity, very unlikely though, because they can quickly recognize what you're doing and then replicate it, or B, drive you into the Stone Age and crush you, whether that's through the legal system or whether that's just through, corporate tactics. Making sure that you understand the demographic you're targeting and making sure it's scalable is really important.
I love that. And it's, as part of, we interact a lot as part of, the accelerator program in Cointelegraph. And this is a lot of the business issues that we talk about. But, for you, the landscape is interesting, right? Because in Web 2, you've got YC, and even in Web 3, you've got some of the more OG guys, Alliance, Orange Style, that have been around for a while. What's your vision for Cointelegraph Accelerator, as a program, and sort of how you help founders go through their own journeys?
This is something that I think is being honed, right? I did step into this position a few months ago, so relatively new to the accelerator as well as the organization overall. But ultimately, as a core statement, I would say our focus is empowering tomorrow's industry leaders, to scale their businesses and achieve optimal product market fit ultimately, right? Like very generic, very generalized, but very important. And when I say that as a foundational statement, it's because we're iterating and growing and scaling and looking to inspiration from those in Web 2 and Web 3, but also comparing and contrasting to find opportunities, gaps of opportunity, and ways that we can really create value that others aren't. And when I say that, product market fit is a big component to that, in my opinion, here in Web 3. And I don't mean this in any derogatory manner to any of our competitors, but when I look around the space, there are highly successful accelerators that have business models that work very well for them. And again, they're very precise, but the real hands-on mentorship, the hopping on a call, having a heavy cadence every day, every week, whatever it may be, depending on the needs of the client, and then being able to focus on not just, here's a connection, here's some investors, here's a warm introduction, here's some capital, but actually dive deep into the inner workings of their business model, understanding the product vision, understanding their value propositions, their communications plan, and how they communicate this information to their target audience. Do they understand their ideal customer profile? And in this market, your ideal customer profile is a little bit more comprehensive than what we would see in a traditional retail product, in that you're pushing a product that is generally an ecosystem or a product itself. If it's an ecosystem, it usually contains multiple products, so it gets a little convoluted there. And then when you start looking at the assets, they're a product in my mind as well, whether that's non-fungible or fungible token. That is a product at the end of the day. There are many people here that are investing in businesses not for any other reason than price action. As Cholo mentioned earlier, it's one of the reasons many of us came here, right? Now that changes over time, I think, as investors mature and as builders mature, and these products actually become something that's consumer facing and viable. But you really have to have that cognizance and presence to understand. So I lost my train of thought. Oh, sorry, our vision. Sorry. So product market fit is a big component to that. Hands-on mentorship, white glove solutions, really being intimate with our portcos. Now, beyond that, there's some other things that I'm exploring in terms of our business models and commercialization that maybe I won't get into today. Maybe we'll save it for a later session. But our vision is again, looking to be unique in that we find these gaps within the space, right? There's accelerators everywhere, more and more popping up. The more and more ecosystems or partners that I have conversations with, they're also looking at ways to implement their own accelerators. So it's definitely a trending narrative, but in order to sustain and be viable and bring in the best of the best and scale and grow, we need to be unique in what we're targeting and how we're isolating and how we create value for the founders that we bring aboard.
Crypto is an interesting space because crypto is one of those spaces where the margins between the sectors is very blurred, in the sense that if you look, we're an accelerator in like Web2, right? You'd be like a SaaS accelerator. You'd be doing like gaming acceleration. Whereas in crypto, everything is just like in one kind of pot of just like a mess, I would say, where there's meme coins in there. There's like TradFi, there's like RWA, there's like AI stuff, there's like GameFi. So, and I think that it's by design to a certain extent, because I think there's just like a lot of creativity comes to that chaos. And I think that to your point, Anthony, is like I think a lot of accelerators, the cadence is not in pace with crypto. Where crypto, you probably have to talk to your founders like once a week, if not more often. Whereas other accelerators are like, well, once a month check in. In crypto, a month is it's a long time. Like Ethereum can go from like 2,500 to like 4.8K in a month, and that just changes the dynamic of like everything in crypto, right? That's as like the base layer of like unit of account, that just changes everything. So I think in terms of just filling that gap, I think that's a very much needed gap. Having a crypto native kind of like outfit that actually fills that gap is a big unlock for founders, as we found, and much more so than others that maybe don't understand the cadence of how crypto moves and how fast and how quickly things change in this space.
Yeah, I just want to build on that, because Cholo and I talk about this a lot, actually. There are very specific Web 2 strategies that work, whether you're talking about growth, whether you're talking about marketing. And there's very specific Web 3 strategies. And it used to be that, there's so many books written on both ends of the aisle, and like, this works in Web 2 and this works in Web 3. From your perspective, is one better than the other? Should founders today be trying to figure out how to marry? How do founders even navigate that? There's so many different things that you could try to do. And the worst thing to try to do is try to do all of them at the same time, because everyone has no resources, and you just been focused. So I'm curious how you sort of view that spectrum of sort of like, you have a background in Web 2 too, you know very well what worked there, but how do you overlay that in a very fast moving Web 3 environment?
Yeah, again, I like to think that there's not as much difference between the two as many pronounce that there is. Ultimately, the Web3 culture is very different, though, but it's not necessarily different than anything we've ever seen before, right? I believe the crypto culture is very similar to what we would see in online anonymous communities, places like 4chan. The psychology, the engagement, the interactions, very, very similar, right? So when we talk about growth, it is absolutely necessary to have an understanding of traditional marketing. Like, you have to understand the fundamentals. And it's not just on the marketing component, it's on the business component. If you don't understand business fundamentals to structure your organization, to actually build out everything along the lines from vision and mission all the way to product release and how you're building your core audience and your community. Those fundamentals act as that base layer. It's absolutely necessary. Now, when you start diving into unique strategies, that's where things do change a little bit. And again, I don't think it's as much Web 3 versus Web 2. I think it is still very relevant to the product and the segment. And when I say that, I mean how we capture the attention of the user. Right? And that's the big issue within this space is when I see Web3 marketing agencies, or I see crypto marketers, quote unquote, there are some very successful ones that I think are doing things perfectly. And then there are many others that simply believe communicating in Web3 and having the attention of a few different influential voices is going to make a difference. And that's not the case, right? We need to understand our ideal customer profile. That is an acronym, ICP, that I do not hear in the space enough. I feel as though many truly don't understand. They just think a crypto user is a crypto user. That is not the case. Whether that's the differences between the ecosystems which they navigate, the tools in which they use, the products that they're interested in, the narratives that they chase, the communities they're a part of. There are vast differences within just this niche ecosystem itself. But then we truly have to get back to the baseline psychology, which is still very relevant to product and segment as well. If you're looking to acquire users for an online game, very, very different than looking for those that are willing to utilize financial instruments. And although we see like a bit of a convergence here in Web3, it's not the same. It's very, very different, right? You need to understand the profiles of these users. So every growth strategy, every activation, it needs to be very, very precise in that capacity as well. We're starting to see the use of data much more effectively in this space. In traditional performance marketing, data is everything. You don't start unless you're collecting data. Half the time you're running something, it is to collect the data so that you can utilize this data to optimize and improve going forward and understand how you A/B test and what to utilize later on. In Web3, we're seeing some great organizations that are providing the tools to do that. We're seeing some really powerful agencies that are utilizing those tools in their own in-house tools as well. I won't name names, but there's an agency I really like in this space that has their own proprietary technology that they built out. It's fantastic. I think it competes very well with some of these other service providers that are building tools as well. But again, data backed is very important. And I think, the difference between a lot of the renowned marketers in 2021 versus today, you look at their performance and you could just make a statement. You could push out the noise. People weren't looking for signal. Noise was fine. And if there was a lot of it, you had traction. And today that's not the case. You need to utilize this data to be able to understand what's working, what's not, and justify why you're doing something that you're doing, especially if you are a service provider and you're going to a startup company like yourselves and saying, hey, $100,000 for us to get started. We've got a campaign. Don't worry. It works before. It'll work again. Well, no, tell us why. Show us how it worked. Show us what did work. Don't just say it did work. Why did it? Can you replicate that? Well, what's the data behind that? And how are you going to replicate it again? That is very, very important. So, to summarize quickly, I don't think there's a lot of difference, but understanding the unique culture is very relevant. And that just comes down to psychology and behavior. And at the end of the day, psychology and behavior are the foundations of Web2 marketing or Web2 growth. It's just you've got some different personality types in the space, perhaps.
One last question on this bit before I go to our last segment. What's something that people get wrong about being a Web3 founder?
Are you referring to as the founders themselves or people making assumptions on founders?
Founders themselves.
That's a good one. There's a number of things. I would say the thing that I see most often, or the failure point that I see most often, is their home team colored glasses. They've got the shades on. They think that what they're building is the end all be all solution. They're getting feedback, from mentors, from perhaps investors, from advisors. They're disregarding that feedback. They believe they know best. And let's be honest, historically, we've seen many cases where there were personalities or business leaders that they fought off the criticisms and they went on to achieve success. And that's a unicorn. That's a once in a while type of thing. That's not every single founder that is getting that negative feedback. But even worse than moving beyond that, your core layer, your close-knit circle of support, when you're disregarding their feedback, that's one thing. But then when you move into the greater community, you start exposing yourself to external components and you're getting negative criticisms from, consumers, your ideal customers, allegedly, the people that are coming with you're driving into your community, your social media following. When the customers aren't interested in the product, something needs to change, right? And it's just going back to the basic search for product market fit that we'd see with traditional accelerators like A16Z Crypto or Y Combinator. What do? They send their founders out to connect with customers, get out personally, reach out, talk to these people, give them an opportunity to participate within your product early on as a demo tester, quality assurance, gather their feedback, take it back, compare notes with the rest of your teammates, and look at how you can improve, right? And it's that ongoing optimization to move forward. We don't see a lot of that in Web3. There are founders doing it, don't get me wrong, but many, they truly believe that they have the solution. When they get negative feedback, they don't want to hear it, and they're just going to power on. And sometimes that's just down the wrong path.
I love that. We're coming up on the hour. I know we started a little bit late this time. Coming up on the hour, we've got a fun segment. This is called the rapid fire round. It's just fast questions. I'll ask you short responses, 10 to 30 seconds. I'll ask both you and Cholo in interest of fairness. Cholo also has no idea what I'm going to ask, so it's always a fun segment. See what you guys come up with. First question, best Web3 founder?
Brian,
you can go first. Okay.
I know I asked you this last week too. I'm seeing if your answer changed.
I'll do a different answer every time. Mike Novogratz. Galaxy stock is on a tear, so gotta give the props.
A follow up to that question, just because you said that, Anthony. Should he have sold to Ripple?
No, not at all.
Which rug hurt the most from prior cycles? Like personal bag, which rug hurt the most?
So there's one that really got me for a number of reasons. It's called Beanamon. It was like a Web3 game, carbon copy, Pokemon, probably all generated real quickly. Young team from Argentina. I came in as an early investor in their private pre-sale or whatever it was. I bought max bags across a bunch of wallets. It was like BNB was $750. I think I bought like 10 wallets, 5 BNB each, as much as I possibly could. And then I minted out like 11% of their NFT supply. I minted like 1,100 NFTs out of 10,000. I had massive bags, right? And I was playing the charts a little bit, didn't quite know what I was doing, but I was trading quite a bit. And then they introduced a component to the game where you could essentially gamble. And I had found that I had some really good NFTs. So I was doing very well and I was winning $10,000 essentially battles every time. And they caught on to that and then blacklisted my wallet and said I was destroying their token or something like that. So I could no longer sell any of the NFTs. And I had a number of whales in China ready to buy hundreds of thousands of dollars worth of NFTs. I had 7 figures worth of token, and all of it went to zero immediately. So that one still hurts me quite a bit because they created an incident where they turned it around on me and there was like a public argument and things like that. And then years later, I found out that they rugged. They went and bought a hotel in Argentina. They got surgery to be taller. And then they offered to unblacklist my wallet like earlier this year, which nothing's worth anything.
So many questions on that, but that hurts me to hear that story. Cholo, can you match it?
I remember Beanamon. I remember that. I like in the early days of my guild, they were shilling us a bunch of like private sale NFTs. So yeah, they had like horse looking things back in the day. I had a different answer last week. That my new answer this week is like in keeping with the GameFi theme that like Anthony started, I would say Axie Infinity. that was it was a soft rug, not a soft rug, but it was a rug in the sense that it was a Ponzi that I guess we just like didn't get out early enough. So it is what it is, but it didn't hurt that much as the one I talked about last week, but it still hurts.
But it was fun while it lasted. And it lasted about 9 months.
Actually, it was fun. Beanamon, I don't know. Beanamon was kind of like, what is this?
Next question. What's the most noteworthy event so far that's happened this year?
Interesting. I would say Genius Act myself, because we're in an RWA space. So Genius Act is a big kind of like endorsement for the industry, like endorsement that like what we've built, like what crypto has kind of like figured out over the last 7 years is worth something of value. So I think that's cool. That's interesting.
Yeah, to complement that, because that's where I was going to go. I would say not a single one, but the dropping of major lawsuits this year from the SEC as well. Just that acceptance and acknowledgement is really important.
Operation Choke Point, go away. Love that. I'm curious your take on this one, Anthony. Which founder, Web3 founder, is secretly the best marketer?
Ooh, that's a good one. My answer would have been much different in the past. The gentleman behind Pudgy Penguins, I can't recall his name right now, but you know what? And my business partner, I've got a business on the side. She's been saying this for years about some of our marketing activations. Let's get more involved in the GIFs and the different tools or websites that integrate within the social media platforms. I can't recall the names of those either off the top of my head, but early on, before anyone even knew what Pudgy Penguins was, he had capitalized that mindshare and attention so quickly. And then beyond that, of course, so many things have happened since then. But that was just like a light bulb moment where I was like, wow, this gentleman understands brand strategy and creative communication very, very well. And then obviously he's done so much since.
For me, it's like who kind of like has crossed that chasm between Web 2 and Web 3 and actually like is someone that's known in Web 2. So I think to me it's like a toss up between like CZ and Arthur Hayes. They've essentially taken their brands beyond just Web 3, right? They're known entities in the TradFi world. They're people that people kind of like cling on to in terms of their views on the world. And I think that's it. That's crypto needs more of that kind of like not transcendent, but like crossover kind of like marketers, where you can speak to Web3 natives, but you can also speak to like the TradFi grown-ups in the room and be able to get attention on both spheres.
When it's all said and done for this cycle, what will be the most important narrative that came out of this cycle?
The DeFi and TradFi are not different. It's just new technology to introduce to finance.
Yeah, I have to agree. I think it's like it's a combination of a confluence of digital asset treasuries, is RWA, is like internet capital markets. All these things are essentially just a version of an idea, which is like what Anthony points out, is like TradFi and DeFi are essentially two sides of the same coin. It's just like you go after the capital formation, you go after the distribution in a very different way. But at the core of it, what you're doing is distribution for a financial asset. And like as we said earlier in this pod, everything is just going to be an asset in the future. And we're just working on how to align these two disparate systems and put them on one rail.
That being said, my follow-up question is, actually Cointelegraph put a piece on this last month. Is the super cycle here?
That's a great question as well. I'm usually, bullish on just about anything and everything for no reason. I don't think it's here yet. I think we're on the precipice of it. Now, the irony in that statement is that all of my colleagues that I interact with on the VC side and kind of institutional capital side, they think that we're coming up towards the end of the run. So that begs the question, if I don't believe the super cycle's here now, and they believe we're coming to the close of this bull cycle, is this the super cycle, or is it going to be a subsequent cycle? Is this going to extend into it, or are we going to have another downturn and then come back stronger than ever in the next run?
I think one of you will be wrong, and I'm on Anthony's side. I think the super cycle is not here. We've not seen. It's like I've seen this in many pods. I think people say like, well, when the top is near, when people ask him like, how crazy can it get? I don't think we've gone to the craziness yet. I mean, ETH has not even crossed all-time highs. Bitcoin is kind of like puttering along and trying to like establish new all-time highs every week. But most altcoins, even like the new coins in this like cycle, like Hyperliquid, obviously is in clearing all-time highs, but it hasn't gone through that like whole parabolic growth that like Solana did in late 2021. So I think by no means we're in the middle of a super cycle. We might be at the beginning of it, but I do think the cycles are getting shorter. I think that the cycles are getting much more compressed. So whereas in 2020, 2022, you had like maybe a good 9-10 months to make your bags, I think this cycle is going to be like 5 to 6 months, and you better get out pretty early.
Last question, and this is all not financial advice, but I just like asking these price action questions. ETH price prediction for 2025.
I'd say 5,500 at the end of November, and that's the peak for the year.
Oh, I'm giga bullish. I'm 10,000 by the end of the year.
I love
but
it.
But not financial advice. NFA.
Just Anthony, in one of the prior pods, someone said like Bitcoin to $1 million in the cycle. So we always like to end it on a positive note. With that, guys, we're up to the hour. Anthony, super thanks for coming on. We always enjoy your perspectives, and we appreciate all your support and look forward to continue building this thing together. For everyone that joined us, thanks for being with us. We're 7 episodes in. We've got a ton of fun and interesting content coming up, both our own and external guests coming on. We hope you found something interesting in this conversation. If you haven't, checked out Cointelegraph Accelerator, what Anthony's building, go check it out. We're huge advocates of the program. If you don't know us, first time finding me digital, please follow our socials, check us out, join our waitlist. We will be live on mainnet imminently soon. Well, Anthony, thanks for tonight. With this, we say farewell to everyone. G-Mute.
Appreciate you guys having me. Love you. Love what you're building. Have a good day, guys.